Car and home insurance provider Aviva Direct is pulling out of Alberta's auto insurance market starting early next year. And then another player, Sonnet, which is a subsidiary of Definity, has said it too will be doing the same, pulling out of Alberta. Both companies pointed to weak profitability and high regulatory uncertainty in Albertan auto insurance. Our guest says other insurers could follow suit or maybe just cut back radically on the number of policies that they offer. We're joined by Nadja Dreff, Senior VP and Sector Lead for North American Insurance Ratings at Morningstar DBRS. Thanks very much for coming on the show.
My pleasure.
Apparently, one problem in the auto insurance market in Alberta is that they still have a tort-based system where people can sue a driver's insurance company. Other jurisdictions have moved away from that. But is the high cost of that one of the problems?
I would say it's certainly a contributing factor. I mean, there's a number of different cost pressures that insurers in Alberta are seeing, as well as across the country.
Yes.
So that would certainly be one leading factor, as experts have noted. But we obviously look at the overall picture, high level, and it's been unprofitable. There's been weak profitability over a number of years, and that is really the underlying cause for these exits.
Is it partly related to a high rate of accidents or a high cost for fixing cars in Alberta?
That is another contributing factor, high repair costs due to inflationary pressures, supply chain disruptions, more expensive parts, and just generally it's more expensive to repair the newer vehicles that have more electronic parts, et cetera. And then, of course, we've seen natural catastrophes that would have hit Alberta versus some of the other provinces, perhaps a bit more. That's contributing. We've seen theft rates that are high across the country. Mm-hmm. So all these different influences are creating the conditions that we're observing.
Is it a situation whereby it'll be self-correcting and that companies still in the Alberta market will be able to raise premiums enough to restore their profitability? I guess that's tricky because it's controlled, isn't it, the pricing?
Exactly right. It is tricky because it's a price-regulated system. So the insurers would have to file for any rate increases if that's what they intend to do in order to set the cost-effective premium. And if the government does not approve those rate increases, then they can't pass them through to the end consumer. So it's not a free market where the insurers can and will change the price according to their indicators and cost pressures. And that is essentially, the reason why we're seeing these market dynamics.
That's hard for the government as well. Obviously, the voters don't want to see their auto insurance rates going up.
Absolutely. A very challenging situation because consumers don't want to be paying the very high prices they're paying. Insurers are not pleased with the weak profitability they're seeing. So overall, it's not a good situation, and we need longer-term solutions, which we expect the government of Alberta to come through with sometime soon.
The government brought in experts, consultants to look at the situation. Can you give us an idea of what solutions they're exploring?
Well, based on the two reports that were commissioned by the Alberta government, some of the options were to look at some sort of a hybrid system or a system that had a component where there was a public insurer involved. Now, since then, we've heard from the Alberta government that that is not going to be the likely course of action. So they are choosing to still retain the for-profit private insurance model. But the big question stands, what kind of system are we going to be looking at? What are these reforms that are to come?
Apparently, the government was worried about high upfront costs of setting up a government-controlled insurance system.
Absolutely. And I mean, most of the insurance companies have portfolios across the country. Some are also international. So they can better manage those fixed costs of being an insurance company and all the regulations that come around it. To start up an insurance company from scratch, obviously very, very large upfront cost. And then over time, we would have to see how it works out. There's certainly examples of those systems in place in Canada, but the upfront cost being sort of initially in the first couple of years being quite high, and then a loss of jobs as well from the private sector.
British Columbia has a government control system. Are you able to generalize? Has that been successful? Has that avoided some of these problems?
Well, it's still in place, so that's one measure of success. But how successful it is a matter of also opinion, because it does place a bit more of a burden on the province itself to supplement any kind of shortfalls that they are seeing. So it's not always smooth sailing, even with that kind of a system. Because then the burden falls on the province, and then the province obviously has the authority to tax its citizens. So it could come through different types of cost pressures.
I suppose one problem is if you do go away from a litigation system and move to a no-fault system, where there's fixed damages paid to people, they lose their ability to sue. And in some cases, they say, well, we're inadequately compensated for the injuries.
Absolutely. And it's a big consideration when deciding on what type of a system you would like to have in a province or a territory. Having your citizens kind of giving them that ability is valuable to voters, right? So lots of different considerations to take into account, and definitely a challenge.
Yeah, I remember Ralph Nader, the consumer rights hero. He said years ago, tort law, suing companies is the only thing that will get them. This is a different case, I know, but it's the only thing that will get corporations. Regulation is no use. And you warn, though, in Alberta, we could see yet more companies pulling out, or even restricting the type of policies they would offer.
Exactly. We definitely believe that other market players are considering their exit. And if not an outright exit, then they are certainly looking at cost-cutting measures that would ultimately result in less availability of certain types of coverage. So overall, these are not a good situation we're dealing with.
Could that be people with expensive cars or young drivers, things like that?
All kinds of restrictions that they have the right to impose, which restricts customer choice ultimately.